Good morning, everybody. December the 14th, 2015. Time to kick off another trading week. And the big news this week is going to be the FOMC announcement, where they're expected to raise interest rates 25 basis points. And that will drive the trading. Energy. Crude oil has gone below 35 bucks. Energy is being blamed for this latest round of selling, with crude oil and natural gas back to 2009 prices, and the impact of these lower prices on the energy sector and the S&P 500, the Dow, Russell, Wilshire, etc. The biggest news overnight was that the European Union beat its industrial production number by quite a bit. It was expected to be up 0.3, came in up 0.6, and China's yuan is once again lower. A weak yuan usually takes the euro higher. Looks like it held it in place. Goldman says there's more devaluation to come, and it's almost certain, because China's economy is built on taking advantage of their cheap labor and manufacturing whatever it is the world wants. And they've lost production. When you look at where products are coming from these days, you see Vietnam, you see Thailand, you see Sri Lanka, you see parts in Africa, Central America. So China's ability to compete labor-wise, due to the raises that they imposed on their companies over the last couple of years, has lessened. More bad news to come in 2016. Iran's official quota used to be 1.3 million barrels per day. So at least 1.3 million barrels per day will be online, and I think Iran can lift 2.4 million barrels a day, of which at least 1 million barrels goes to run their economy. So no news domestically. To kick things off, I imagine that the news wires will be burning about this latest Paris Agreement and Paris Accord, where the United States is expected to pay money to third world countries, as are other industrial countries, but there aren't a lot of teeth in this particular agreement, so nobody really knows how it'll turn out, other than there'll be plenty of stuff to talk about, how the West is taking advantage of the rest of the world and not doing their fair share and destroying the environment, etc. These people, from a governmental standpoint, it's all about a carbon tax to get more money into government coffers if you're on the government side of it. That's where the bottom line is. So here we have a market that's going to open today with the focus on the E-mini, in my opinion. If the E-mini continues to sell, and the E-mini got whacked pretty hard coming into to the opening of the financials. If the E-mini comes back and recovers, and it certainly can due to Fed support, 50-lot trader, then Treasuries have peaked. So clearly resistance is at 8, and it might be at 4. So selling failure to take out 04 to 08, I think, is the easiest trade to see. Then the next area would let them get stops above today's high, 11 to 15. Why are we aggressive on the sell side? If the Fed does raise interest rates this week, this market has rallied quite a bit. It's up about 1.5 points, and so it's rallying into the FOMC announcement, which means it can come off a little bit. Higher interest rates aren't good for Treasuries. 29 to 25 will be buy one. Like to get it done closer to 25 than 29. And then 17 to 21 will be buy two. And you can see that we got this high here at 22. We've got that high right there at 24.5. So this should be pretty good support, as that letter M right there in these single prints So down to the direction of the E-mini. Pretty simple. Okay, the state of Kansas got a ton of snow or rain or ice over the weekend. The minimum reported in places was an inch. Like most of it was west and east and north of us, so we got over an inch. But that's a lot of moisture for this time of year. We kind of dry out December through February, so the winter wheat crop's in great shape. And that will bring pressure, more pressure on the eggs. Okay, sell failure to take out 8 to 12 on the 30-year, and 19 to 23. Really, we take out, get through 16 area. Anywhere 157.24 to 158 is where better resistance is. Back, let's do it that way. Make it 23 to 27. Give it a little bit of room. On the buy side, pretty good support beneath the buck in the 24, 28 area, picking up this level right here. There's 20. There's a low at 20. There's the mean green at 27. So 25, 29. That's pretty aggressive. And then 17 to 13 for buy 2. Knob spreads come in a little bit, but again, all eyes on the E-mini. And the E-mini has taken advantage of a thin market and gotten a pretty heavy sell-off. So the 50-lot trader is active off the opening. We've got our answer that the Fed's not going to allow the bottom to fall out of the market. The other scenario is they let it go, raise interest rates on Wednesday, as widely announced, telegraphed, and predicted, and then you get a relief rally as the shorts cover off. Rumor fact trading. The rumor is Fed's going to raise interest rates. The fact is they did. Okay, gold. Same situation. Best sellings 80 to 85. We've had pretty good support in this 65 area, and that's where we find ourselves once again. So 65, 63 buy 1, 61, 59 buy 2. I'm going to play for a trading range. On the sell side, London peaked at 70. We're at 67.50, so 69.71, sell 1, pretty aggressive. 74.76, sell 2, not so aggressive. And that just happens to be where resistance does lie, so no magic in those numbers, other than the fact that that's where sellers were previously. Okay, Draghi spoke at 6 Eastern, and obviously didn't have a lot of impact on the market. And I mean, Draghi, rhetorically, this guy plays the game as well as anybody does. We're going to do what we're going to do, and they talk it up, and they talk it up, and that always keeps them 3 to 6 months from having to do what they have to do to support their economy. So with the industrial production numbers up and inflation down, they don't have to do much more than they have to do right now, but I have a feeling that they are prepared to add to their QE purchases. Okay, 109.75, right down, that's where we are. At high volume number, buy 1. Buy 2, I'd like to pick up this area down here. So if that comes out, we're going to put 109.25 for buy 2. 10 1/4, sell 1. 10.50, sell 2. And it may take a 110 to get in. We're looking at a B in this structure. Thanks, Drewski, for that input. And that might be what brought in the last wave of selling into the E-mini. It took us down to 1991. Crude oil. Okay, we have a chart low in that 33 area. I haven't been able to find that price. We'll keep looking for it. That was the low set before we rallied to 140 bucks plus. So we came in last week looking for stops below 35. We've got them. And right now, just on a market note, at 32.50, 33.50 area is probably reasonable support. There is a 33 number out there on the charts that people will lean against. So we're at 34.64, 34, 34 1/4, buy 1. 33.50, 33 1/4, buy 2. On the sell side, the spill was from 35, so 35, 35 1/4, sell 1. Then if we get through 35 1/4, this area right up in here, I think we can go a little bit higher. So stops above the overnight session high. Sell 2 will be 35.70, 36. This anybody that got into the crude oil and natural gas business after 2009 will probably go under. Their companies are going to receivership. I'm surprised there's not a vulture fund that's already formed on Wall Street to take advantage of this. But this price war by Saudi Arabia to take out, first it started off talking about taking out Russia, but it appears that they're after our fracking industry. And you have to remember, you're always at the mercy or risk of the low-cost producer. And Saudi Arabia has been the swing producer that has stabilized crude oil prices over time. But they're betting the house right now. And what they don't really understand, in my opinion, is that horizontal drilling, horizontal fracking, it's there. They know where it is. And it's fairly quick to bring online. And the infrastructure is already put in the 3 major shale plays right now. And there's another shale play as far as crude oil goes in Louisiana. It's both natural gas and crude oil. So we know where the inventory is. We know what it takes to get it. On a vertical well, you can kill the well if you stop producing it, crude oil. In horizontal wells, you can't. So that is where the risk is for Saudi Arabia. Okay, if we take a look at this screen, we've got this pretty clean break in this 80 to 90 area right here. We've got these highs. So basically, we've got this low right here at 86. We've got these highs just above 90. So this 85 to 95 area is pretty good support. We've had 1, 2, 3, 4, 5, 6, 7 days in a row. And we had this spill this last time that went from 2100 to the low of 1836, and that happened in 5 or 6 days. And so the impetus behind this selling is Wednesday's widely forecasted bump in interest rates by the Fed, plus pretty weak economic news. So that's where we are, this 85.92 area. looking at the structure, Reg, I haven't gone in and looked at that. No, I have not. But what happens is that, you know, due to the cost of production and the rest of it, that those reserves should be taken down. But it's all a function of price. You know, if crude oil were to go back to $75 a barrel, a lot of that stuff would become producible again. Okay. 91. So we've got this high volume number at 85. We got this high volume area basically at 79 to 85, maybe as high as 87. So 75 to 85 should be pretty good support. We've got this low volume number at 91.25. Now, for those of you that are new or visiting the room, low volume numbers are support and resistance. And if you take out first time hit, and if you take them out, you're going to go to the high volume numbers. So when we come down there and we look at this array, got a 433 down here is the high volume number, 1979. So trading down to 1980, give or take, if we can take out this 91.25 is the play. Obviously 2000 is resistance right now. So the first sell is 99 to 2100, and then I'm just going to make it 5 to 10 because of the volatility, but you can see that this W period high up here at 4 is another one. So 99 to 04 right in here is R1, and then I'm guessing 10 is R2. And you can pick up this volume number right here basically at 10. So 99, 04, and then 10 are the three numbers that we have over the top. Beneath us on the buy side, buying 89s to 91s. And this rundown before the opening, we see that quite a bit. The market takes advantage of lack of liquidity, etc. And then if the 50 lot player steps up to the plate and supports the market, we'll have our answer. So basically we're going to sell against 2000 and then the 5 to 10 area. And on the buy side, support is at 91, so 89 to 91 will be buy 1, and then it's going to be 80 to 85. Going to lean against that high volume number down at 79. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible. And Reg, if you can fill us in more on reserves, etc., write-downs, your expertise would be valued in the room. Thank you.